Welcome to Real Estate and You. I'm Gail Freeman, your realtor with Century 21 Woodland Realty in Flushing, Michigan. Today, we're going to be talking with an expert from H&R Block concerning income tax. Today, Vickie, I want to welcome you back again.
Thank you.
And it is so important that we get out here what's going on in the tax arena. Because, you know, last year we talked about different things that would help the homeowners.
Mm-hmm.
We talked about things that would help the business companies and things like that. But before we get started, I would like for you to introduce yourself. And tell me a little bit about yourself also.
Okay, well, my name is Vickie Wykes, and I've been with H&R Block for 14 years here in the Flint area. I'm an enrolled agent with the Internal Revenue Service, which means that I can actually represent a taxpayer if they ever get in trouble. Our local office right now is on Miller Road in Flint, and at this time we're offering a lot of really nice products. We are doing our Emerald Advance line of credit. We'll be doing that into January, and it is open to both new and prior clients. We will be opening on January 6th, 2014 to actually start doing income taxes. We'll be ready to go, so clients can give us a call at 810-230-2848, and we'll be happy to help them.
Very good. So you've been in the business over 14 years.
I have.
Boy, that is fantastic. You're looking for retirement, aren't you?
No, not really. I really like helping people to find the biggest deduction possible or the lowest tax liability.
Fantastic. And you know, that's what this show is all about. We want to help the consumer out there to know what they need to do and who they need to go to. Because a lot of times the consumers don't know where to go to get their taxes done. And a lot of times they don't understand what they need to bring to you. So today we're going to talk about some of the homeowner tax breaks, if that's okay with you.
That works for me just fine.
Well, Vickie, go into telling me a little bit about the homeowners tax breaks. Give me a little insight.
Well, there are some things for the homeowners that are actually going to expire on December 31st of 2013.
And what could they be?
One of those is the mortgage insurance premium. That would be for the taxpayer who can itemize on their tax return, and it was a deduction that they were allowed to take along with their mortgage interest.
Now, when you say they can itemize, what are some of the things that you would say I can itemize to get this deduction?
Usually it's like medical expenses, your state and local income taxes, your property taxes that you pay. In Michigan, our license plates are based on the value of our cars. Therefore, people can take that as personal property tax. It was the mortgage insurance premium, charitable contributions.
That's the name of just a few.
Just a few, right.
Just
and when
a
it
few.
all totals up, and it's more than somebody's standard deduction, which is an amount assigned to them by the Internal Revenue Service, that's when we would choose to itemize the return because it's going to give them a lower tax liability.
So with them coming into H&R Block or any other tax consultant, what do they need to bring, or what should they do?
Okay. Well, first of all, with H&R Block, they can always call and ask us, what should I bring, and we'll have a discussion with them and give them kind of an itemized list. But just off the top of my head, they would need to make sure they bring all of their income documents, W-2s, retirement 1099-Rs. There's another form called a 1099 miscellaneous for somebody that's self-employed, or an account or a list of, if they are self-employed, their different incomes and that type of thing. And then anything that pertains to their home. It could even be to, if they rent, it can be to their apartment and their rent, because there are some credits for the state of Michigan, which we can discuss in a moment if you'd like. They need to bring anything. They need to bring copies of their social security cards, their driver's license, and that type of thing, just for identification purposes.
So if they, you've given us some things that we can bring into the office. Now, if we tend to forget, is there a number, maybe they can call an 800 number or a toll-free number, or what do you have?
They can call our 800 number, which is 1-800-HR-BLOCK, or they can call our district office or any of the other, I believe we have 18 locations in our area. And again, our number at our Miller Road location is 810-230-2848.
Okay, fantastic. Now, we're talking about the homeowner tax breaks. Now, is there anything else? Now, is this an expiration date on this, or a cap on the money, or?
Yeah, the the mortgage insurance premium one expires on December 31st. The other one that I think is very important for your viewers to know about is what they call the Mortgage Forgiveness Act. And unfortunately, we know in past years, a lot of taxpayers have lost their homes for one reason or another due to losing their job, relocating, a lot of different things. And what happens is when somebody loses their home, they can actually create for them what they call a cancellation of debt, where the loaner rather, forgives the debt that may be owed on that home. And a few years ago, as part of the American Opportunity Act, they created the forgiveness of debt, where the homeowner could, on their primary home, could be forgiven of having to pay taxes on any canceled debt that they may have incurred.
So now, would that have something to do, now you, as far as them losing the home, you said things like that. So if I'm in a foreclosure or a short sale or something like that, they would do a forgiveness for those?
A lot of times, that's correct. A lot of times the loaner would forgive, like, for example, they bought the house for $200,000. They basically, it goes into foreclosure, the client goes in, they basically give back the house, they do a short sale. It depends on the loaner and how they choose to treat it. But if they forgive debt, then unfortunately for the taxpayer, that then can become taxable income to them. But this act it came into being, and I'm thinking it was like 2008 or 2009, I don't know the exact date, allowed them the opportunity on their main home. It had to be their main home. Couldn't be a rental house or a vacation home. It had to be their main primary residence. They could actually be forgiven the debt on that home.
Oh, okay, very good. Well, that's some good information, because a lot of people don't know what to come to their tax consultants with.
If they receive anything from the lender, they basically, it's called a 1099-A, and that's how it's identified, or a 1099-C, which is the cancellation of debt, and they definitely need to bring those with them. It's very possible that we wouldn't be able to complete the return in one sitting. We might need more information, but H&R Block is very good about giving the clients the chance to get everything they need.
Okay, and the 1099-C is what?
Is the cancellation of debt.
Okay, and it comes from, both of these forms come from the lender.
Would come from
the main thing.
That is correct.
What we're saying to our consumers today is, if you receive anything from your mortgage company, the lender, you must save that so you can talk to your tax consultant to find out if that's going to be beneficial for you.
Absolutely.
So that's the bottom line. If you get something from the lender, bring it in.
Bring it in.
I mean, if you have a paper bag full of papers, bring it in.
Well, I don't know if you remember, years ago H&R Block had the commercial with the shoe boxes. We actually have clients who bring in their shoe box.
But I mean, a lot of times we don't know what to bring to you. So what we do, as myself as a realtor, I'll put everything in one pile, and when it's time for taxes, here I come. You're going to get it all. And then you're going to tell me what I need and what I don't. So
exactly. I tell my clients, if when in doubt, put it in the envelope.
Oh, that's a good saying. When in doubt, put it in the envelope.
Yep.
Okay, now let's go on and talk a little bit about the students and the teachers.
Well, before we do that, I would also like to tell you that there's a lot of people have heard about the energy credit, because this affects homeowners.
Oh, that's it.
And the energy credit right now is due to expire again on December 31st of 2013. What a lot of people don't realize is if they've used it in prior years, it only had a maximum of $500 at this point. But again, if in doubt, if they put a new roof on their house, a new furnace, a new hot water heater, those types of things, bring the receipt with you and sit down and talk to your tax advisor and let them help you determine whether or not you qualify for that credit.
So is that a cap still on that?
There is still the cap on that. At one point they had extended the cap or raised the cap, but right now it is still, I believe, the $500.
$500. So
but
I mean,
again, it bills. Like if I took a credit 2 years ago for $200, I would only have $300 left.
Oh, I understand. Okay, so in other words, if the cap is $500, you used $200 last year, you only have a balance of $3 left.
Correct.
So when you use that up, it's gone.
It's gone.
So it's good to remember that, but we have until December the 31st of this year, 2013. Fantastic. Okay. Okay, fantastic. Is there anything else on the home heating credit that we need to know?
For Michigan, Michigan has both what they call a property tax credit and a home heating credit. The property tax credit and the home heating credit are based on household resources. So what a lot of people don't realize is even if they're not employed, that they're just receiving retirement or just Social Security or even just SSI, they may qualify for one or both of those credits with the state of Michigan. Because again, it's based on household resources. And this credit is available to people who both own their home and people who rent their home. And it's totally your income versus what you pay in property tax credit and or rent. And again, come on into H&R Block. This is something we do for a lot of people. And then in addition to that is the home heating credit, which allows, again, lower income taxpayers to help get some funds to help them pay that heating bill. And again, it is based on household resources, so we have a lot of people who, again, are just receiving Social Security who qualify for that credit. And it's based on their income and the number of people living in their home.
So household
Resources.
And what are you saying is household resources? So everybody understands it's just not your paycheck.
It's not just your paycheck. Household resources are your wages, obviously. If you have a retirement, it's also your Social Security. If you're receiving SSI, workman's compensation, child support, those types of things are considered household resources.
Okay.
But we have a lot of people, especially in Michigan, who do qualify for those credits and they don't realize it. I had a lady come in, sweet older lady, did not realize she got the home heating credit every year. And we were sitting there one day and I said, well, what about your rent credit? And she's like, well, I can't get a rent credit. Well, she did for 4 years. She bought a new couch.
So you were able to go back and pick that up. Now, how far can a consumer go back?
For the property tax credit, they can go back 4 years in the state of Michigan. For the home heating credit, unfortunately, for some, that is a year to year. So what happens is for 2013, that credit expires on September 30th of 2014. And from that point on, it is not available again until the next tax season.
So home heating credit expires on September the 30th of 2014.
Correct.
And as they cannot go back and pick that up.
They cannot, because the one from 2012 expired on September 30th of 2013.
Okay, so it sounds like September is the date for home heating credit every year so far.
Every year.
Fantastic. Well, that is some very good information. I'm glad that you were able to share that with us. Now, we've talked about the homeowners tax breaks. We've talked about the home heating, okay, which is very good, and the property taxes. We've touched bases on that. Now, can we go into, I would like to go into talking about something for students.
Okay.
Because, our young people nowadays, and not always the young people now, we all going back to school once in a while.
I take classes every year to do what I do.
So we don't say young people, because we all go back and get a little bit more education.
Absolutely.
So let's talk about this student and teacher tax break.
Okay.
Give me some information on that. What is that?
Well, there's an education credit, and right now the popular education credit, is what we call the American Opportunity Credit. And that credit is open for students who have not completed 4 years. It's a wonderful credit because part of it is what we call refundable. I always say that means it can actually put money in your back pocket, above and beyond your tax liability. So it's really a nice credit. But what's going to happen this year is there's also called a tuition and fees deduction. And again, this is one of those that's going to expire on December 31st. And what that does is it lowers your income. If you're a higher income taxpayer, it actually will lower your tax liability because it's what we call an adjustment to income. It lowers your earned income in that. It's either $2,000 or $4,000. It's not a credit. It is an adjustment, which means that it lowers your taxes rather than a dollar for dollar. But it expires for students and parents who are eligible to claim this again on December 31st.
This December the 31st is popping up everywhere. I mean, we need to take note what's going to be through with December the 31st of 2013.
That's very true.
And I want you to reiterate that once we get down the road here, because you got a whole list of programs.
I have a couple pages here.
And we're going to work on those.
We are.
Okay.
Because a lot of these were extended. You've heard on the news about the extenders. A lot of these have been extended 2 and 3 times. So right now, at this point, yep, December 31st is the magic day.
The magic date, December the 31st. Everybody
Yep.
need to remember that, December the 31st, 2013.
Yep.
But we will come back to that to make sure that everybody understands what programs are so important to finish this year, 2013. What else on that?
Another thing that's happening, and this is another one of those December 31st, is educators. That's K through 12 teachers. It can be principals, anybody who works in the K through 12. They had what is called an educator expense. And once again, this is for taxpayers who are in the education field, and they cannot itemize. In other words, they don't do that Schedule A that we talked about earlier. And this gives them the opportunity to, again, do what's called an adjustment to their income of $250. And that's when they buy supplies for their classroom that the school doesn't reimburse. Things like Kleenex or special programs for their computer, things that are used inside the classroom. And again, that has been kind of nice because it lowers your taxable income. Again, it's not a credit. It's an adjustment, but it's also going away on December 31st.
Okay, so, we've got some good benefits out here that's helping our consumers, not only the students, the teachers, but the homeowners as well.
Oh, absolutely.
However, the important fact that I'm hearing here is quite a bit of it is going away on December the 31st
And
of
that is-
2013.
That is very much a true statement.
Very good. Well, Vickie, we've touched bases on quite a bit of that, but I want you to go into, you had one other program here that you were going to talk about.
Again, we have their state and local sales tax, and now that is an adjustment. Again, that actually goes on the Schedule A. And remember when I was talking about the different things that you can deduct on your Schedule A, like your mortgage interest and that type of thing? We have a lot of people who don't pay don't pay state tax.
Correct.
Some of our retirees, of course, we know with all the tax law changes in 2012, more of them are now paying taxes on their retirement, but we still have some retirees who are not required to pay state income tax on that retirement. So what there was, and again, this one expires, guess when?
December 31st,
31st.
2013.
And what that allowed them to do was, in lieu of taking and deducting their state income tax, they could actually deduct their state sales tax. And there was a formula where they had what we called a standard deduction amount, or they could actually use their actual sales tax. Now, what was nice about that is for a lot of them who use the standard deduction, they could also take, in addition to that, if they bought a new automobile, which we know automobile sales is very important to Michigan. If they bought, did improvements on their home, I used to laugh and say, trains, planes, and automobiles, but it's something that could be added to it. But once again, December 31st.
2013? Very good, Vic, very good. Now, tell me a little bit about
Well, I have a good subject for you. Would you like to hear it?
Yeah.
Because-
Is it 2013?
No.
December?
This was actually 2014.
And that's what I want to get into is some of the new things that's coming up for the 2014 period for our consumers.
Okay, well, this one's kind of nice because this one is for your small business owner, somebody who actually has what we call an office in the home. This is where it has to be basically exclusively used for business, but a lot of people in different who do different things do have that exclusive use of their home office. And in the past, they've had to take like a portion of their mortgage interest, a portion of their property taxes, and different things like that, and use actual expenses, and they'd have to depreciate their home and different things. But what's coming up in 2014 is they can use, it's called a simplified option for the home office deduction.
Oh, okay.
It still has to be exclusively used for business. In other words, you can't have, the TV and the kids come in and play, or the couch where you like to take your nap. It's 100% exclusive use for business. But in lieu of having to do all of those other expenses, this is going to actually go on the square footage of the room versus the square footage of, the square footage of the room, and at $5 a square foot. For an example, if the room that they use is 200 square feet, and they multiply that by the $5, they're going to have a $1,000 home office deduction.
Oh, okay. Now, is there a maximum deduction for
I
this?
believe the maximum is $1,500, and if they had any part that they didn't use, it will not carry over to the next year. It has to be all used in the current year. And this is something that would be claimed on their Schedule C. That's the form that is used by people who are self-employed.
Okay, and let's see, we've got, no addition.
Yeah, nothing else. They can't take the amount of their utilities. They can't depreciate the home, which is not always a bad thing. They'll still claim their full mortgage interest and their full property taxes if they can itemize on their Schedule A. But this is just something that's going to help the client out so that they have another deduction against their self-employment income.
It sounds like it's real good, because it used to be where we couldn't carry our home. Like you said, we had to break it down a certain way.
Right, you had to actually, and a lot of times people wouldn't even get a deduction for their business use of home, for their office in the home, because when it goes up against a lot of your income and that, a lot of times it wasn't even available. This again it's called the simplified method. They can use either the simplified or the actual, which is where we take all of the numbers. And of course, if they come to H&R Block, we will help them determine which one is best for them.
And this particular program can only be used for a home office.
It's for the home office, correct.
Okay, the small business person, like for instance, I'm a realtor, but I work up under a broker. So I might do a lot of my work at home.
Right.
Now, can it be both? I do my work at home and I do my work at the office?
Being self-employed, that's a possibility, but one thing you have to remember is that office in the home has to be exclusive.
It has to be exclusive.
And again, I would just recommend that if somebody's not sure about this, that they give us a call and sit down with a tax professional. We have people that have worked for H&R Block for 40 years. So they definitely know what they're doing. And we have a lot of different products and services that also help our taxpayers out.
Well, Vickie, we've talked about a lot of programs, but what I want you to do at this time, if you would just sum it up as far as some of the special programs for December the 31st, 2013, that will be expiring soon. If you could just hit it with the toppings or the titles that they are, so the consumers will know what we're speaking on, what's going to happen to them December the 31st, 2013.
Okay. One of the things is they're going to, at this point in time, these are what we call expiring tax law, is the state and local general sales tax deduction on the Schedule A will be gone. This will be the last year. I mean, they can still claim it, but this will be the last year. The tuition and fees is an adjustment. That's for people who are going to school or for parents who are paying for their children to go to school. That expires. The qualified educator deduction of $250 expires. The mortgage insurance premium deduction expires. And the discharge of indebtedness on your principal residence expires. And the non-business energy property credit, for like furnaces and that type of thing expires.
That sounds like a lot of stuff that's expiring on 2013.
That is
true.
But
the good thing about it, we have 2014 coming up, and we had a positive note on what will be taking place to help the homeowner and the taxpayer for 2014.
Absolutely.
And that particular program was called?
It's the home office deduction. And then again, taxpayers can still always take their mortgage interest on their first and second home. They can take any property taxes that they pay at anywhere. I mean, it can be, somebody has property in Alaska and California and Florida, they can take all of the property taxes if they can, again, itemize.
And we're going to take that up again later pertaining to the seller that has two homes. And we will talk about that in an upcoming TV show.
Okay.
But I want to thank you at this time, Vickie, for coming in from H&R Block to give us this information to help our consumers to understand what they need to do to get their taxes done and done properly, because they have to have a sense of going to someone that they can trust and that has the knowledge of doing the job the right way. And I do appreciate you for coming on the show, giving us the insight of what has to take place. And I want to say thank you again, Vickie and H&R Block, for letting you come in and share this information with us today.
Well, you're very welcome. And one thing I'd like to say too is H&R Block, like I said, has a lot of products and services. We have a possibility for clients to actually withhold their fees from their refund. We have, it's called Peace of Mind, and it's like an extended service policy. But one of the things we offer, because you know you always have the taxpayer who likes to do it themselves, or they see somebody else, and it's called our Second Look program. And it's very popular, and it's a win-win situation. Because if you want to bring your taxes to me, I'll take a second look at them at no charge to you.
Well, fantastic, because that will be a win-win situation.
And if we agree with it, then basically you're going to get H&R Block's guarantees. If we don't agree with it, then we're going to tell you what's wrong, and we'll let you make the decision as to whether or not you'd like us to fix it. Gail, I think it's important for your viewers to know is the IRS won't actually start processing returns until at least January 28th and possibly as late as February 4th, instead of the original date, which was the 21st. However, H&R Block is open and available to do your tax return starting on January 6th. What we'll do is we will complete the return, we will send it to the IRS, so as soon as that door opens, that tax return will be filed. But again, it's the IRS delay, and we understand this will be difficult for some of our clients, but they're saying it's because of the shutdown that they needed extra time to prepare their systems to start receiving returns. Okay?
Well, Vickie, I thank you again for that, and I might take you up on that.
Okay.
We've come to the end of the program now. It has been very good information, and I am so glad that you were able to join me today. Keep in mind, if you have questions, give me a call at 810-423-8391, and I will get the expert pertaining to this program, H&R Block, Vickie, to help us out. Thank you.